Would you like an opinion on a financial matter you're dealing with? Whether it's about retirement, investments, taxes, or 401ks, Scott Hansen and Pat McLean would like to help you by answering your call. To join Allworth's Money Matters, call now at 833-99-WORTH. That's 833-99-WORTH.
Welcome to Allworth's Money Matters. I'm Scott Hansen.
I'm Pat McLean.
Glad you are with us. We're going to have some fun this next hour because you are with two financial advisors, and what is more enjoyable than that?
Most things.
Certified financial planner, chartered financial consultant. We help people plan their financial futures and come broadcast on the weekends in your ears to help you with your finances, help you make wise choices and all that kind of good stuff. So if you'd like to be part of our program, we'd love to hear from you. 833-99-WORTH is our contact number. 833-99-WORTH. That's 833-999-6784. And let's just go right to the calls. But it says this is Susan Walker.
Yeah. All right. Well, let's try.
Yeah.
Would you believe it's Roger?
Roger.
It's Roger.
Close.
Roger.
Close.
All right, Roger.
Roger, welcome to Allworth Money Matters.
What can we do for you?
Thank you. Appreciate you're having this open time to call in. So I've thought about calling a lot, but never did. One very quick personal question. On the website, I don't get there very often, but when I look at them, I can't tell. I don't really know who's who.
I'm the guy with hair, Pat.
Pat has hair.
Yes.
Okay. Perfect.
Yeah.
All right.
Scott is the guy with muscles.
Here's my question.
He's strong like an ant.
Thanks, Pat.
Here's my question.
Yes.
So I've looked at various ways in terms of inheritance and the idea of maybe perhaps giving something now rather than waiting until I die. And we have two rental properties, one of which is occupied by my daughter and her family. And the thought occurred to me that perhaps it would be wiser to give them the property now rather than wait until I pass away and then they receive it as an inheritance.
Well, maybe.
How old are you?
Me, I'm 67, retired.
And what is your approximate, and you're married?
You married, yes.
Okay. What's your approximate net worth, including the rental properties?
Ooh, maybe, I don't know, $1.5 million, something like that.
Okay. So,
and what are the rental properties worth?
We purchased it 5 years ago for $295, so I'm guessing about $350, maybe $325 in that range.
and are you living off of any of your investments?
No. And I do have a pension.
And you're living off your pension?
You don't
Correct.
need this income at all if you gave it to your daughter.
No.
And you
I
have a
don't.
survivor benefit on your pension should you predecease your spouse?
Yes. Full continuance.
So you said you had two. You have how many children?
Three daughters.
Okay. So here's where the rub comes in. If you gave one of the children $295,000 home, there's no mortgage on the property?
No mortgage.
Okay. You're going to have to turn around and give the other two the
Some
same
time.
amount
Sure.
at the same time. Your net worth
That
is
would have to be specified in some document, I'm assuming.
well. So that's where you're going to run into the problem. So
You may or may not. I don't know your family, but most families, one kid gets a $300,000 house, $365,000 house. The other ones would be like, what? Like,
and then they say and you say, well, no, I put it aside in the trust that you get it when we die. And they're like, well, we don't know when that is, Mom and Dad. I mean, that's 25, 30 years. Why are you treating this child better than the other children?
yeah, I'm paying rent. I'm paying a mortgage.
Right.
Shouldn't I?
And all of a sudden they get this.
Mm-hmm. Yeah.
And so I got to tell you, it is.
If you had enough assets where you could give them all $350,000 worth of value, then that's one thing. But
you don't. You don't. It's $1.5 million. And I tell you, look, my wife and I redid our trust. Right? Scott and I are pretty open on this show. We redid our trust recently. My oldest is, what is he? 25, business degree. My second child is a teacher, really super smart. Third child has a degree in economics. Fourth child is in college for a business degree.
Now you're just showing off.
Well, that they all graduated.
They're all perfect kids.
Oh, it's
honor their mother like crazy.
Oh, it's like Leave It to Beaver right there at our house. There's no
drama whatsoever.
There's no Irish arguments. There's none of that.
They never drank, never smoked marijuana.
No, perfect. Never missed a day of school.
No.
Anyway, so we redid our trust, and Scott Hansen was the trustee on my trust but my kids are of age now. They're responsible. So we named 2 out of the 4 as trustees, right? Thinking, well, they're probably the most capable to. We told the 4 kids about it. It didn't work.
That's hilarious. I hadn't heard the story.
It didn't work. You're still now the trustee on my trust because it couldn't. And by the way, it doesn't mean they're going to get more than anyone else. It just means that they had to handle the administrative task of dissolving the estate.
They just didn't like the idea of their older sibling having upper hand on them.
Or that someone that we were showing favoritism one over the other, even though it was an administrative task, that no one would get more than the other based upon the laws and how the trust was written. My point being is it's hard enough to actually keep the siblings talking to each other if you divide it equally. But if you start putting one in front of the other,
I would not recommend
I actually had a client years ago said, my son actually has a business. We're going to give him $100,000 to put into his business. I said, you got to turn around and give the other sibling $100,000. And they did. I said, because at the end of the day, if you create disharmony in the family that the siblings aren't talking to each other, what's the point? What have you achieved? I mean, the hope is that your kids all talk to each other after you're gone. You don't actually want to lay it up that you actually create the animosity between them.
Right. Yeah, I was more concerned. Well, I was originally concerned about the tax.
We have no idea what tax are going to be in the
tax
future.
Advantages or disadvantages, et cetera, et cetera.
If you were on your deathbed right now, if you're on your deathbed and say, I've got 3 weeks to live, we say hold the asset. That way it receives a step-up basis and capital gain taxes are forgiven, then it'll be transferred at your death. But you're not.
But a net worth of $1.5 million, it's highly unlikely the estate taxes will affect you either now or in the future. I'll bet on that.
Yeah.
Your net worth isn't high enough.
You're not going to have a estate tax. And I'm also betting that the step-up basis is going to be eliminated at some point.
My guess is the step-up basis will look something like a capital gains at the dissolution of the property if inherited, which means that it carries its basis forward until it's disposed of. That would be my guess. But I like the way you're thinking. Don't do anything.
Yeah. Wish you well.
Okay.
Yep.
So the personal outweighs any kind of financial.
There's not much financial there anyway.
Okay.
Yeah.
Okay.
All right. Appreciate the call.
Can I sneak in one more question?
Sure.
Fire away.
Okay. So I have in my IRA, I've retired, so all my 401k was converted to IRA. And I decided originally that I wanted to manage a small piece of it because I thought it was interesting and fun. So I've got about currently, this is after the increase, I've got about $600,000 that's managed by a firm, a large firm. And I've got $300,000 that I'm managing, but I'm realizing that I'm not really managing it. And I think I should look to have someone manage it. The question is, does it make sense to have a different company manage that?
I don't think so.
So I could get a feel for a different company, or should I just lump it into the one, and then if I decide to transfer to someone else, do the whole
problem
one?
The problem with having 2 different accounts, there's a number of problems. Although you might not realize it, what it ends up, investments are all based upon, at least a good investment should be built and constructed upon what your needs are. What your income needs are going to be, when you're going to be spending the principal, what your time horizon is for that, how comfortable are you with the ups and downs in the markets, all those things. And if you've got 2 advisors that know they're kind of competing against another, You might have one take a little more risk than they would otherwise, hoping that it's a good year for the market, and they could say, that guy's an idiot. Look how poor he did compared to mine. You need to transfer that account over here. I mean, that's what ends up kind of happening. It's a bit of
But
horse.
if they didn't know they were competing, they wouldn't necessarily know they were competing, would they?
Yeah, I don't think it matters one way or the other.
If you've got someone who's acting as a fiduciary, they don't manufacture their own products, that go out in the marketplace and does what's best for you, then I would just use one advisor.
Are you using a firm like Fidelity or Schwab, or are you using a third-party investment advisory firm?
It's a third party, very large.
Perfect. And the reason is they don't have a dog in the fight. They're
An
not gonna
independent firm, or are they a big bank?
No, they're independent.
Okay.
They're independent.
Perfect. And the reason is they're not pushing any of their own manufactured product, right? So
I would both accounts live together in the Schwab.
The custodial
holds the funds. Mm-hmm. Part of it's managed, part of it's me.
Yeah. If you're tired of managing, or just give it to the firm you've got the money with.
Yep.
Okay. Well, what if you were not particularly enamored with?
Well, then I'd fire them.
Firm's doing.
Well, then if that's the case, then I would talk to somebody else. And my guess is, if you'll talk to someone else, you like them more, and you're going to think, I'm going to bet on this one instead.
Yeah. If you're not happy with it, this is how I think about investments. Would I buy that today? And if the answer is no, you shouldn't put any more money into it, nor should you own it. That gets rid of the emotion.
The problems tend to appear in terms of not of the nuts and bolts and the holdings, but just the public persona of the company, et cetera. So, which has changed radically over the years.
I don't know what that means, but if you wouldn't buy it today, then don't own it. I think
it's an existing advisory relationship. The fact that you call us to ask for financial planning question, and instead of your advisors, tells us this might not be the best relationship.
Oh, got it. This is after one of the principals said some things in a public forum?
Well, it's just, it's been sold a couple of times, and so things have changed over time, and it's very different than when I originally held it. So had the firm anyway. So.
Anyway. So I think your main question on don't give your house to your daughter.
Yep.
And by the way, Pat, I have 4 kids. My 2 older ones, very different financially. My daughter is always asking for money from me. She always wants money. Can I pay for this? Can I pay this? Nonstop. And my son, he graduated college in the middle of a pandemic. Was living in Santa Barbara teaching paragliding. Not making a lot of money. So I was helping him out, and he said, Dad, I don't need this much money from you anymore.
Wow.
And I'm paying his rent now. And he was like, you don't need to do that.
Wow.
And I said, I'm happy to do it. So, but he sees his sister that I've helped out more, and I don't think he cares. I think
he doesn't view it as a horse race.
And I even said to him something like, if you want to pursue a career that you love that doesn't provide enough, I said, I don't mind actually helping you a little. And he says, well, I want to find my own way. I want to be able to take care of myself. And
that's nice.
That's what I thought.
Yeah.
My daughter's very different.
My kids don't ask for money much, other than the fact they do the Costco 2-step, which is amazing.
Which is what?
Anytime my wife's around, them visiting, like we were in Denver a couple of weeks ago visiting my son, he had to go to the Costco.
Well, of course. Mom's in town.
He ended up with an air conditioner.
Good for him.
That's what I said to him. I said, it's a rental house. What happens if you move? He said, I'll take it with me.
All right, let's continue on here. Let's talk with Paul. Paul, you're with Allworth's Money Matters.
Hi, guys. Love your show.
Thank you.
Long-time listener. And and I do know which one has hair, I think. Anyway, so here's my question is, do I have enough to retire, ... again? I retired the first time about 12 years ago and realized a few years later that I probably didn't have enough, so I'm back in the workforce. But based upon all the questions of data asks that I hear from you guys, others, here I've kind of got here's all the questions that I think are that you ask. So
okay.
I'm 66. My wife is 60. We live in the Central Coast of California. 4 adult kids. 3 are married and a bunch of grands, and like you, some of them are Costco 2-steppers. And our current annual taxable income is about 170, of which 120 is W-2, and about 50 is from a pension I started 11 years ago. I have about $58,000 a year also from a non-taxable annuity that my wife's had for a long time based upon a settlement.
And have you started Social Security?
Just started it. I wasn't going to until 70, but then someone suggested, why don't you start it and just dump it all in a mortgage? We have a house. It's valued about $950, probably closer to $950, but we have a mortgage of $500,000. So I started just a few months ago taking Social Security and dumping all of that to the mortgage. We have about $900,000 in qualified accounts, IRA and 401k, plus another about $60,000 in an investment, $100,000 in a brokerage account, and $100,000 in cash. No other debt other than a small student loan my wife took. She went back to school recently.
Oh.
To get her bachelor and graduate stuff. So that's.
How much did you say you had in your 401ks and IRAs?
It's called $1 million.
A little over 900. Right now we're dumping. Since I went back to work, I'm pretty much trying to dump as much as I can. I'm maxing out every year on the 401k contribution, as well as my wife has a. Go ahead.
And on your mortgage, did you refinance recently into a 30-year fixed?
It is a 30-year fixed, and it's a 295.
Okay, so don't put any more money into this thing, into that mortgage. You're not going to pay this thing off before you die.
Right.
And your payments aren't going to change unless you have an opportunity to do a re-amortization on it. When do you?
Okay.
It's not you're not going to have enough time to really make that much of a difference. So let's say that you work, you push hard, and you're getting that thing paid down, and now it's $300,000, and you're like, okay, now I'm just going to resume payments. The payments are going to be based upon what the original mortgage was.
Not what the...
Some mortgages allow for a re-amortization where you can say, hey, there's supposed to be 26 years left. Given the fact my balance is so much lower, can you figure out my payments now? And they'll say, oh, we're happy to do that. But not all of them.
You're not going to get this thing paid off by the time you die. And if you do, let's say you pay it off the day before you die, it's just more money for the kids to spend.
Right.
There.
Yeah.
So can you retire today? It's close. It's close.
The fact is you had $120,000 W-2 income, and it's being replaced with right now Social Security. And but granted, you've been paying into your retirement account, which you wouldn't be doing once you're retired, and you've got your almost $1 million saved up in your retirement that could provide $30,000-$40,000 a year in income.
It's close.
It's close.
It's close.
Yeah. Well,
I'd get with an advisor and go through all these numbers here.
This isn't like, it will require a change in your standard of living some.
If you retired immediately.
Yeah.
And so kind of being able to look at, all right, what happens if we wait a year, 2 years, 3 years, and to give you some options like, this is what it means to me. What's the cost-benefit analysis, essentially?
So you say instead of, we didn't need Social Security right now to live on, and I sure didn't want to spend it. So if I hear you correctly, you're saying don't dump it in the mortgage.
That's right.
Just dump it in the retirement account.
Or freeze it until you retire.
Yeah.
Assuming you have a normal life expectancy.
That's what I would do.
Should I start none of my IRA is a Roth. Should I start open up a Roth?
Not now. Not
No.
at that income level. So what you want to do is just freeze your Social Security. Just stop it.
That's what I would do.
Right?
That way it's going to start growing again.
It's going to start growing again. Just forget you ever took it. Just call it.
No, before you do that, you need a full retirement plan. Get with a good advisor to do a retirement plan. You can look at all these different scenarios. What happens if I do this? What happens if I do that? What happens if I pay down the mortgage? What's happening? Can I do a re-amortization on my mortgage? What would that mean? What if I worked for 4 more years? What if I worked for 2 more years? You need to go through that decision tree, and then it'll come to those decisions on.
Scott's right, because I'm thinking you're probably going to work for another 2 years, and in which case you would freeze your Social Security, but you may be able to retire today. It's close. The tie goes to the runner.
Yeah. Okay.
All right. Appreciate the call.
We wish you well there, Paul.
For being a longtime listener of our show.
Yeah. Let's now talk with Mike. Mike, you're with Allworth's Money Matters.
Hey, Scott and Pat. Love your show.
Thank you.
Hey, I have a question regarding an UTMA account that I've had for my daughter since she was young. The account has grown from about $5K to about $60K. My daughter is currently 24 years old and will be going back to graduate school.
Mm-hmm.
And for the next 2 or 3 years, we'll have little to no income. We won't need this money for grad school, and likely she can use it for a down payment for a house for the future. I'm wondering if this would be a good time for her to cash out from the mutual fund and turn around and reinvest it and take the hit on capital gains when there is zero to little income.
She might want to spread
Would this
that out,
make sense
yes,
as far
but
as
maybe spread it out over a few different years, tax years.
When she's in graduate school, assuming that she has no income. I like your thinking.
Does she have no income now?
Currently, she does have income, yes.
Okay. But
She's
still,
working part-time, making about $25,000.
yeah, there's still some room at a zero capital gain tax rate.
Yep.
It absolutely makes
Yep,
sense.
Yep.
What age does the kitty
Okay,
tax
so-
go to? 24?
I think it's 25. But that's off the top of my head.
Yeah, there's kitty tax rules. I don't remember if it's 24.
But she can convert it out of the UTMA into her name.
Yes.
Yeah. Yes. Explore it.
Remember.
You might want to do it over 2 years,
Okay.
3 years, just depending. I mean, you're going to have to do a pro forma on a tax return.
Yeah, you will. That's what I would do.
All right,
It's-
appreciate it. Thank
You're a
you
good
very much.
dad.
That
What a
was-
great dad. Seriously.
Well, fortunately, the investments have grown very well since since she was 3 or 4 years old. So it's been great for the last 20 years. So
That's pretty good, I must say.
That not only that, but you're a good dad actually having the discussion with her about how to actually get the money out as tax efficiently as possible. It very rarely takes place in most families that they have these discussions about.
How many people put a $5,000 in an UTMO when their kid's 3? That's pretty rare too.
Pretty rare.
Yeah, pretty rare.
And then actually having discussions about tax liability on
They spend
distributions.
the money to go get new furniture for the living room and
There are a lot of competing interests. Seriously.
vacation, going to Hawaii. Lots of other
Anyway,
things to
appreciate
spend
the
money.
call.
Yeah, wish you well. Let's talk to Gordon. Gordon, you're with Allworth's Money Matters.
Hold on here.
All right. We got nothing going on.
Hello, can you hear me?
Yes. How can we help
Can
you,
you hear
Gordon?
me?
Yes.
Oh, yeah. Thanks for taking my call, you guys. I just had a question about when to take Social Security.
All right.
Okay.
I'm 66. I'll be 67 in October.
Okay.
I've been retired for about 10 years.
You have a pension?
Yeah, it's small, but I have one.
All right.
What are you living off now?
Investments and my pension.
And how much do you have invested and how much is your pension? So what's the corpus? What's the principal amount of the investment?
I got $3.2 million in my 401k, which I don't take anything out of.
Okay.
And my pension's $22,000 a year. And then I have another $2.9 million in other investments.
What was your
like,
taxable income
mutual
last
funds.
year?
Oh, it was only about $68,000.
Did you convert to a Roth IRA last year?
No, I have a Roth IRA.
But you didn't convert. Have you converted any, since you retired, have you converted any of your money from your IRA to your Roth IRA?
No.
Okay. So you have tremendous planning opportunities above and beyond when you take Social Security.
Oh, okay.
Because of the marginal tax rate you're in, you should possibly defer taking Social Security.
And what I'm worried about is you hit 72 and you've got required minimum distributions. You go from a nice low tax bracket to suddenly one of those that say he's not paying his fair share.
So you will go to, assuming that there's no growth on your account now in the next 6 years, which isn't a fair assumption, your distribution on your IRA alone will be north of $95,000 a year, right? Let's assume that this thing goes up by a half again, then it's $140,000 a year. So what happens, we missed a couple years of planning here, Gordon, where we could have actually converted from a regular IRA to a Roth IRA. Social Security is part of it, right? Social Security is part of it, but you may want to defer Social Security at age 70
Yeah.
and convert as much from the IRA to the Roth IRA.
The challenge
as
is he's also at the income level where he could be a target of reduction on Social Security.
which is exactly what the issue is. So we missed a couple planning years here. And when we talk about income level reduction, it doesn't require it now, but it will in the future, most likely. Where
It could be means tested.
yeah, means test. So actually, you got some work to do.
Yeah, and in a perfect world, the last decade, we could have been converting some of this to a Roth at a lower tax rate, hedged our tax bets. Our concern now is, I understand why you want to take Social Security now, because from a net worth standpoint, I think it makes sense. But given the issues you've got,
You need to
do some more planning. We can't answer on the call.
yeah. You need to convert.
Hey, we're taking a quick break. Stick around for more of Allworth's Money Matters with Scott Hansen and Pat McClain.
Can't get enough of Allworth's Money Matters? Visit allworthfinancial.com/radio to listen to the Money Matters podcast.
All right, welcome back to Allworth's Money Matters. Scott Hansen.
Pat McClain.
And let's talk here
wait, Scott.
What?
Yeah, me. Gotta promote the show. If you like this show or listen to the podcast, please feel free to join us and ask your questions. 833-99-WORTH, 833-999-6784. And if you're listening to a podcast, please, if you like it, go ahead and rate it. Review it. But don't you give stars?
It's called a review. Give us a review.
Okay.
Right? Come give us a review.
What isn't a rating? If you're giving someone stars, it's a rating, and then you write the review. So we're both right.
Yes. All right. Let's talk now. If you want to join the show, 833-99-WORTH is the number. 833-999-6784. We're talking with Don. Don, you're with Allworth's Money Matters.
Hi.
Hi, Don.
I have you on speakerphone. With my wife, Julie.
Okay, Julie. Hi, Julie.
We own a small business, and we're 64 and 65 years old. So we're thinking maybe we'll sell it soon, maybe we'll sell it later. We're both in good health, but we have some friends who have advised us, if you can retire now, do it. So my question is, when we are ready to sell this business, do you think it's best to use a business broker or just send out flyers or contact my competitors?
Let me ask a couple questions. What type of business is it?
Retail bakery.
Okay. So, and what is the approximate revenue of the bakery last year?
About $370,000.
Okay.
And what's it net?
About 70.
Okay.
Yeah, you're gonna. So you have a couple choices. One is you can do an internal succession, which is someone that is in the bakery that works for you now wants to take it over. Right.
The problem there,
the risk doesn't really leave you.
Right. You end up covering you carry a note. Maybe the person can't pay the note.
They can't run the business. You come back, take it back. Next thing you know, you retire 2 years from now. You're baking croissants at 6 a.m. in the morning, right?
Right.
In this size business, and the reason I ask the size and the revenue is because there are business brokers that actually work in certain spaces. So if you own a convenience store, you would actually find someone that actually just does convenience stores or mini storage or something along those lines. You're going to want to use a business broker, and you're going to want to interview 2 or 3 of them before you actually do this. The problem is there's probably not that many trades in the U.S. on businesses, bakeries, or restaurants this size. So it's hard to determine what the multiple of revenues or EBITDA, earnings before interest, tax, and depreciation, and
It's worth whatever someone's willing to
amortization
pay.
is going to be. So it's going to be worth whatever anyone is willing to pay.
And if it's a competitor who thinks, is this the kind of bakery where people come in and get croissant stuff, or do you bake stuff and deliver it out to restaurants?
Both.
And what percentage
Wholesale
of
and retail.
and what percentage of your business is wholesale?
About 15 to 20%.
Okay. So most and the reason I asked that question, if it was the other way around, it was 85% wholesale, you'd actually go to your biggest client and ask them to actually buy you. But yours is the other way around. It's 85% retail, 15% wholesale. So the answer to the question is yes, you want to use a business broker.
Okay.
And it's probably going to be an owner operator, right?
That's right. It's going to be
someone who's
Yeah.
mid-age. They want a different changing career, and here's an opportunity. I mean,
just be careful. You don't want to carry any debt on the transaction going forward if you can help it. You want to get as much money as you possibly can up front. And I don't care if it requires the person buying it has to borrow money from their home or raid their 401k or their
borrow
IRA.
from their mother.
It's not your problem. You want to get as much money on the front side, and you want it to be a fixed amount, not based upon future revenues or any other formula. Come up with a price. This is the price. Pay the cash. I'll train you for 3 months. I'm going to walk away.
And
Good plan.
I think it's wise to go through this process now, whether or not you decide to sell now, because you never know what happens in life, right? And what we know is roughly 1 out of 2 of us retire earlier than we'd planned because of a health issue, something, whatever, right? Life happens at times. And you're going to get a much better value for the business when things are going well.
Scott, I was going to point out exactly that. You don't know if this transaction is going to take a month or
3
2
years.
years. You have no idea, right? So you want to interview 2 or 3 business brokers as quickly as possible, get their estimate, and talk to some of the people that they have represented in the past. Don't rely on what they tell you. You want to talk to people in the past that they've done, and you're going to ask the people they have done transactions with, what price did they actually market the business for? What did they end up getting for the business? What were the terms of the transaction? Who handled the legal aspect of it? If we're lucky, I'm guessing if you're lucky, this business will go for 300, 350, which would be 5 multiple of EBITDA. That would be on a high side.
Maybe
I don't.
maybe more. I don't know.
I don't know. But
it could be someone else in the industry that says, "Oh, we can do it for a lot less expensive than what they're doing for it," and they crunch their own numbers. And who knows? But this is the exploratory process you need to go through now.
Yeah, and by the way, Scott and I own an investment advisory business. We buy investment advisory businesses that become part of us.
Yes, they become partners, but it is a transaction.
It is a transaction. So we're fairly familiar with the space of these, what they call M&A, mergers and acquisitions, because we do a fair amount of it in our industry ourselves, as well as running Allworth. So it is a process, and the earlier you start, the better it will be.
Okay.
All righty.
Good. Thank you for your help.
Yeah, thank you. Glad you called.
That was an interesting call. We don't normally get those.
Well, what is interesting there, there are millions of Don and Julies out there with nice little businesses, nearing retirement,
veterinarians, dentists,
all kinds of
doctors, orthodontists, chiropractors,
dry cleaners, yogurt shops.
Yeah,
there's lots of profitable small businesses that
they're aging out.
Yeah, well, whole society. I mean. Is do it to some.
And the earlier, if you have one of those businesses, the earlier you start on the process, the better, because you do not want a distressed or fire sale.
Nope, never works. I mean, it's good for the buyer, but not for you. All right, let's continue on. 833-99-WORTH. Talking with Anna. Anna, you're with Allworth's Money Matters.
Hi guys, how are you?
We're wonderful.
I have hopefully a simpler question for you, and it's about retirement. I'm looking at retiring probably in about 5 years at my minimum retirement age. And I think that right now I have all of my retirement venues funded to the max, and I'm wondering what else I can do to make sure that I'm not going to be eating cat food in my old years.
And Anna, you use the term minimum retirement
I know,
age.
I hadn't heard that one.
What is that?
Well, I work for the federal government.
Okay,
so,
thank you. So it's the minimum age that you can leave with a vested pension.
And what age is that?
56 and 10 months.
Okay.
And how old are you today? You're 51.
51.
Are you
52.
burnt out?
No, but I don't want to work a day after I have to.
Okay. No, but I'm retiring.
Not one day longer. Okay.
And are you
Just
married? Are you married?
No,
And are you supporting any children?
no.
Okay.
And what percentage of your salary will this pension replace?
Let's see. So I think my pension is going to be about $35,000 a year. We get a thing called Social Security offset.
Mm-hmm.
Yeah,
So
okay.
I think that's going to be about another 20 or something like that.
A bridge, they'll pay you extra until age 62 or 63 or?
Until I think it's the first retirement date or the first Social Security.
That's right.
date.
It's 62. It's a bridge. So then it will so that's 55.
And what's your salary now?
About 100.
And how much money do you have in your TSP thrift savings plan?
When I looked at it the other day, which was before it took a nosedive last week, it was about $930.
And do you owe anyone any money?
By the way, it didn't take a nosedive. Wait till it's down 20%.
Yeah, it was off slightly.
The problem, Anna, you're getting retirement's now, and you're starting to think more about it, right? It's 5 years out, and you're watching this a little closer. It's gotten large. So now a 10% swing, 10%'s not that much, but a 10% swing is now $93,000. That's a whole year's worth of work. You can't view it that way or you're going to go crazy.
And who do you owe money to?
No one.
And your question is, do we think you can retire in 5 years?
What else can I do with my money? I'm maxed out on my TSP. I'm maxed out on a Roth. I've got money going into savings. I don't think that there are any other tax deferred or even.
Well, you could just go out and buy.
retirement.
You can just go buy, let's say, an S&P 500 index fund or ETF. Just
Yeah, which is by its very nature is tax efficient, and under current tax law, capital gains rates are lower than ordinary.
it's not as good as the Roth, but you've
No.
maxed out the Roth.
No, and so how much money do you have in savings?
About 90.
And how much money do you have in your brokerage account?
About 300.
And how much money do you have in Roth?
Oh wait, I thought that was my brokerage account.
Oh,
Okay, you've got 300 grand in a Roth?
Yeah.
my gosh. I don't know how much more money you actually need to save.
I don't think you do.
No, truly.
I'm dead serious too.
I don't think you need to save much
No.
more money.
Just keep putting money into my wine rack.
No. Into your what?
Into my wine rack.
Well,
Well.
listen, if that's, if you do enough of it, you'll shorten your life expectancy and you won't need as much money.
So Anna, you're at this place in your life because you've been concerned about your retirement. You're concerned about your finances. You've lived below your means probably your whole life, my guess, right? You're frugal about your finances.
Mm-hmm.
That's why you're in the position you're at right now where you're 50 years old. You've got over $1 million saved in retirement accounts. You've got a house that's paid for, and you've got to have a really nice pension in another 5 years.
Quite frankly,
Sounds like a hard position to be in, doesn't it?
well, you put yourself in that position. I mean, you should take credit for it, right? Sacrifice became part of your lifestyle.
Yes. Which you can choose to continue going forward.
Or you could moderate.
Yeah.
And by moderation,
My mother is 81. She still saves every month.
your mom does.
Yes. I don't know why, but she feels 82. She feels good about saving a little bit every month into a savings account or something. Good for you, Mom.
Good for you.
She retired 20 years. She's been saving every month since she's been retired.
So she's living off her
It's just
pensions.
her. She just feels better about herself, I guess, when she saves.
So so the answer to the question is all the tax-deferred vehicles of actually, you've used them all. You're using the Roth, maximizing the 457, or excuse me, the thrift savings plan. You could buy the S&P 500. Just buy it.
You can invest more. You can buy more wine bottles. You can travel. You can
Do
buy-
whatever you want. Don't change your current saving habits in terms of putting the money in the Roth and putting the money into your thrift savings plan.
How much you're maximizing the thrift savings plan?
Yeah, so it's like 21, I think. And
See, you're going to
26
something
grand.
like 6 or 7 for Roth.
Yeah, you're going to.
So you're making $100,000 and you already got seven. You already have 30,000, 30% going to retirement,
Yeah.
right?
Yep.
Yeah.
Well, yeah, sure. And plus the lovely taxes we pay.
That's right. That's right. You'll be fine. Just don't change that. Spend the rest. And don't watch the 401k. Make sure, spend money with an advisor to make sure the thrift savings plan and the Roth are allocated correctly.
Don't watch it.
But don't watch it. And if you're not comfortable.
Oh, I don't.
Okay.
Okay.
Well, you use the word nosedive.
Yeah, the only reason I had to
Scared
look
us.
at that is because I had an appointment with your friend for an estate planning earlier this morning.
Okay.
So.
All right.
Oh,
Well, good. Hopefully it went well.
all right.
Anyway,
Appreciate the
glad
call.
you called. Thank you, Anna. We said we were. A couple weeks ago we said we're not going to talk about it anymore.
About,
Crypto stuff,
Oh, yeah.
cryptocurrencies.
yes. It's everywhere. It's everywhere. And
Everywhere in the news, you mean?
yes, it's everywhere. Everyone talks about it.
Yes.
I don't get it. It is the Silk Road of money. It is built for speculation and black market transactions. That's what it's for. If I'm
Not the blockchain,
let's not confuse the two.
not the technology behind the coin.
No, that is here to stay.
Of course.
And brilliant, right? It's a ledger a visible ledger. It makes all the sense in the world. But the Bitcoin itself, that you could create any sort of a currency, you and I could come out with Allworth coin tomorrow. We could.
Facebook was going to have one for a while, didn't they? Remember?
Were they?
Yeah, a couple years ago.
Zuckerberg's
face was going to be on the coin. I don't know.
Dressed as a Roman emperor. he had a little olive thing around his head. In a white robe.
Yeah, I think he's one of those guys who's probably not all that highly loved and respected.
Oh, I don't know. I don't know the guy. But
Not as a personal, but I just mean as a
oh, you mean in
kinda
the
a business tycoon guy.
Oh, I don't know. But so let's talk a little bit about this. What this Bitcoin, cryptocurrency, Doge, there's hundreds and hundreds and hundreds of these coins out there now.
Yes.
Hundreds, right? So the ones that we hear about, you see in the press, are Bitcoin and Dogecoin and Ethereum or Ethereum or
Whatever it's called. Yeah.
whatever. The danger in these, right? Remember, it is an auction market based solely on what someone else is willing to pay for it. It has no intrinsic value in and of itself, other than we look back in the years, where have we seen this before? We've seen it in tulips, had almost no intrinsic value, right?
Well, those were the Dutch.
Okay, well,
That was 500 years ago. or
well, they
whatever it
were
was.
at the time. They were the richest economy in the world.
I know, I'm teasing about that.
Right?
Yes, of course.
The Dutch were the richest economy in the world at the time. They were the traders of the world, right? We have seen this with Beanie Babies. We have seen this with baseball cards. But those even then had some value. Why did Beanie Babies do well? Why do baseball cards do well? Right? If you were
Well, like in the tulip mania, the tulips, they were going for years worth of wages. I mean,
multiple years of wages,
Yes.
right? But it was because someone else was able to bid more, right? The difference, I think, about this crypto money, Scott, is that there is a use for it in the black market, which is it's easy to move currencies around the world.
I mean, you look at it, there's a couple major flaws here. The first, and I don't know why no one's been discussing this until Musk brought it up about a month or so ago, is the energy usage to create more of Bitcoin is massive. And now it's come out in news. We're seeing stories. But we talked about this
several months ago.
A year ago, there was an article about it. And we're like, so there's a finite amount of coins, but there's still a lot more that can be minted or mined. But the amount of energy, and I'm thinking, aren't we at a time when we've got activists that are getting on the boards of oil companies saying you got to stop your carbon footprint? There was a couple of weeks ago, there was one of the European countries said, I forget which oil company it was, that they've got to reduce their carbon footprint by 50%. So we've got all this green moving this direction. And yet at the same time, which oftentimes the same group of people that are behind these
the coins.
But it takes massive amounts of energy. But to create nothing.
It will be. This is it is a spectacular bubble.
That was my first flaw.
Okay.
The second one that you just alluded to, it's the illicit payments. And if you look at the amount of cyber ransom that we've seen the last couple of years, it's skyrocketing because the bad guys have a form of payment. They don't have to set up a shell company and take a credit card. This is, hey, it's cryptocurrency. No one's going to know. It's impossible to track who this is. And so if there was no way to exchange cash, there wouldn't be nearly as much of this ransom stuff.
That's right. Right?
I mean, every company worries about it. We worry about it. We've got extra people on staff that do nothing just to make sure we're secure for this sort of thing.
And governments, well, we saw it a couple of weeks ago with the pipeline that was shut down. They paid a ransom. Right? And it facilitates through this cryptocurrency.
So you've got China. They're putting the clamp. They can do anything they want because China.
Yeah,
they do anything they want.
There's no such thing as private company in China. You can pretend there is. You can pretend that it's a private company, but you're there at the pleasure of the government, right? So China
can be arrested at the pleasure of the government tomorrow because they decided they don't like what you're doing any longer.
That's right. That you're not gonna
even in Hong Kong.
It doesn't matter.
Pretty crazy.
So the fear is, where does it blow up when country after country after country just comes in and says, you're just not doing this anymore, we're going to kill you if we find out you're doing in crypto. Right?
Well, then there's people in the United States, some legislators that think we need to be regulating this more.
Well, naturally, since my kid was asking, how do you pay taxes on crypto? I said, how do you pay taxes, or will people pay taxes on their gains in crypto?
Well, the IRS is already going after. I think they're requiring like Coinbase and some of those companies to issue 1099s, just like a brokerage account. If you got, at the end of the year, you get a statement from the bank or statement from your brokerage company stating here's what you've got in interest and gains and all that stuff. They send it off to the tax man as well. So you better report it because the tax man knows about it. So they're going right now and already looking. I think the bogey was $10,000 or more. And they're saying, all right, let me see what income taxes people pay on this.
This won't end well. I mean, and we've seen tremendous volatility in these coins. And by the way, those are the coins that actually take off. The coins that don't take off, we talk about it all the time. We talked about it weeks ago about the special purpose acquisition companies, which are other bubbles.
And those have gotten
just decimated.
Boy, you want to talk... Can we switch topics? We don't have much time.
But the point being is, we always talk about on the show with clients, what we help them do is make decisions that they can't, that
keep them from making mistakes from which they cannot recover.
That's right. That's
financial mistake they cannot recover.
And when
making a decision with their finances, it's irrevocable.
Yes.
Changes their lives.
Yeah. And these SPAC companies are more of the same.
What I find interesting about the SPAC companies,
special purpose acquisition company,
right, we did talk about it a few weeks ago, but essentially it's a way to avoid a normal process of going public, which is highly burdensome regulatory, costs you millions of dollars. It's a way to go around this, and they figured out the guys who put these together. Hey, if we can structure these right, and we can make fat money off this, we can maybe make 20% of what we raise just the way padding our pockets on doing these.
They call it fat stacks. That's what the kids call it. They're making fat stacks.
So what ends up happening with these special purpose acquisition companies, these SPACs, they raise a certain amount of capital, and then they have a finite window, typically 2 years, to go out and find a company to buy.
So you're betting on the management team that is going to go out there, which is why they put a lot of celebrities and sports stars behind them, because it gives some sort of credibility. Like a celebrity has some sort of a background in investing.
So you've got
Not that they don't.
You've got these SPACs that are traded that don't own anything yet. There's a value behind them. They're still looking to buy something. And what I kind of scratch my head, I'm like, how many of these SPACs have been committed? How much capital must either be deployed within that 24-month window or returned to the investors? So how much bidding are we going to see on companies just from, how much is this going to create some more speculative boom? If you're the sponsor behind a SPAC and you're thinking you might make $20 million on this thing or $2 million, whatever the number is, that's a lot of money. And suddenly you find yourself, we're having trouble finding anything.
You're going to go out and buy a piece of garbage. You'll buy anything at that point in time.
Instead of taking it zero.
Yeah, and returning money
well,
back to the
you're clearly
investors.
conflicted.
You make nothing if you return the money back to the investors.
It costs you a bunch of money.
So you're going to ending up with
who knows?
Whatever. And so these stocks, actually some of the SPACs that haven't even acquired companies yet have actually started trading down.
That's for that reason.
For that reason. They started trading down. So
I think it's going to be an interesting to watch this over the next year.
Yeah.
And a half.
And fortunately, the issuance of SPACs, special purpose acquisition companies, has actually gone down.
Well, no one wants to sell them anymore.
Yes, I saw that.
I shouldn't say nobody, but I mean, people are looking at them like, I don't think this is the best option. The bloom's off the rose here, and this doesn't look as good as Evan was stating it was going to look.
Yeah.
But there's an old saying on Wall Street, when the ducks quack, feed them. It's a terrible saying. That's Wall Street. It's why we're not part of Wall Street, why we've been an independent firm since 1993. So anyway, we're out of time. It's been great having you with us. Again, if you haven't been on our website, Allworth Financial, in a while, I encourage you to do so. There's some great educational materials there, and hopefully it'll make you a wiser investor going forward. And we'll see you next week. This has been Allworth's Money Matters.
This program has been brought to you by Allworth Financial, a registered investment advisory firm. Any ideas presented during this program are not intended to provide specific financial advice. You should consult your own financial advisor, tax consultant, or estate planning attorney to conduct your own due diligence.